Hey there, if you're in Dubai or anywhere in the UAE and looking to invest in the S&P 500, you might have found yourself a bit lost. It's not as straightforward as it seems, right? Maybe you've been wondering, which ETF should I choose? Which platforms can I trust here in the UAE? How do I avoid those pesky currency conversion fees? These are common hurdles for UAE investors, and they can make the process feel overwhelming. But don't worry, I'm here to help you cut through the confusion. In this video, I'm going to walk you through exactly how to invest in the S&P 500 from the UAE step by step. I'll show you how to pick the right ETFs, avoid unnecessary fees, and choose a platform that works best for you. For the complete version, feel free to check out our article on investingintheweb.com, link in the description below. Step 1. Pick an ETF tracking the S&P 500. The S&P 500 consists of the leading 500 publicly traded US companies. It includes large, well-known companies such as Apple, Tesla, and Microsoft, just to name a few. While you can't directly buy the S&P 500 index, you can invest in an exchange-traded fund, or ETF, that replicates the index's performance. While there are no ETFs listed on the Dubai financial market, the DFM, that directly track the S&P 500, investors can still gain exposure to the index by investing in international ETFs listed on other exchanges. For investors in the UAE, it's important to note that you have access to both US and European ETFs. However, investing in US domiciled ETFs might have tax implications, so it's often advisable to consider European domiciled ETFs as well. For non-US residents, VOO and similar US ETFs impose a 30% withholding tax on dividends and may also subject your assets to a 40% estate tax if your holdings exceed $60,000 at the time of death. Fortunately, there are better alternatives that are specifically designed to mitigate these issues. Irish domiciled ETFs. These ETFs, such as Vanguard's VUSD, the Irish domiciled version of VOO, offers significant tax advantages. The dividend withholding tax is reduced to 15%, which is half of what you'd pay with VOO. Additionally, Irish domiciled ETFs are not subject to US estate tax, making them a much safer option for non-US residents. Accumulating ETFs. If you prefer not to deal with the hassle of manually reinvesting dividends, you might want to consider an accumulating ETF, like VUAA. Accumulating ETFs automatically reinvest dividends, which could be more tax efficient and potentially lead to greater returns over the long term. Currency considerations. When choosing the currency for your ETF, it's generally advisable to select the currency of the country where you plan to retire. For example, if you plan to retire in Europe, a euro-denominated ETF might be a good choice. However, over the long term, currency exchange rates between developed countries tend to mean revert, so the impact may not be as significant as you might think. Additionally, transferring funds in AED can be more cost-effective than USD, and some banks in the UAE, like HSBC, allow for international transfers with lower fees. By opting for Irish domiciled ETFs like VUSD or VUAA, you can save significantly on taxes and avoid the pitfalls associated with the US estate tax, all while maintaining exposure to the S&P 500. To assist you in finding suitable options, we've compiled a list of some of the largest ETFs that track the S&P 500. This list was generated using the Morningstar ETF tracker. Step 2 is to choose a good ETF investment platform. Having selected one of the mentioned ETFs, you need to find a broker where you can actually invest in it. You can compare different platforms directly in our article, where we analyze their fees, minimum deposits, regulators, and more. We feel confident investing with any of the platforms listed. For investors in the UAE, we recommend considering platforms that are either globally recognized or have local support. Interactive Brokers is one of the top investment platforms globally, and they have a strong presence in the UAE. For beginners, Sawa Trade or eToro are excellent choices, both of which offer user-friendly interfaces and competitive fees. Trading 212 is also a good choice for beginners, and new users can grab a free share when using our promo code IITW. Additionally, our channel features step-by-step guides on how to invest in the S&P 500 using various platforms, including IBKR and eToro, so be sure to check out our other videos. The final step, place your order. Once you've found an online platform that meets your needs, it's time to place a buy order for your chosen ETF. For this example, we'll use Interactive Brokers, link in the description below. Start by searching for your ETF. We'll use CSPX in this case, since this is the largest largest non-US S&P 500 ETF by assets. We will buy the USD version, but you can also buy it in other currencies like the euro on other exchanges. Next, click buy and enter the order details. Then you need to choose the number of shares you want to buy and the order type. We will now buy approximately $2,000 worth of shares using a market order. Then just click send buy order and you're ready to go. And that's it. Our order has been filled. As you can see, it's pretty straightforward. We hope you found this video helpful. If you have any comments or feedback, please leave them below. And if you want to check more details or read our comprehensive analysis, you can read our article on investing in the web, where we go more in detail about which ETF you should choose, the fees you'll be charged, and other info. Don't forget to subscribe to our channel to stay updated with our latest videos. See you next time.